Good morning and welcome to Stock Market Today. It's Wednesday, October 24th, 2018, and I'm your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Over at StockTwits on the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And I would urge you to head over to ChaikinAnalytics.com/today to sign up for the email so you can follow along with this show and get free stock ideas every day. So U.S. equities were down in Tuesday's trading, but finished well off their worst levels of the day. S&P 500 and Russell 2000 recorded their fifth consecutive decline. Treasuries were stronger across the curve, and the 10-year yield finished at about 3.17%. The dollar was weaker on the major crosses, in particular against the risk-sensitive yen. Gold finished up 1%. Oil came under pressure. WTI down 4.2%, its second worst day of 2018. Breadth on the New York Stock Exchange, negative 2.4 to 1. Breadth on the NASDAQ, negative 2.1 to 1. Your outperformers were the defensives, REITs, consumer staples, and then communication services and communication discretionary round out the top four. Your underperformers, energy, industrials, materials, and financials. And as we get to the desk this morning, S&P futures point to a lower open, down about 50 basis points, 0.5%, following a mixed session in Asia, while stocks in Europe are generally higher. 10-year yield trading lower, near 3.12%, while the dollar adds 20 basis points. WTI crude trading flat this morning, and gold is off by 20 basis points. So let's take a look at that key reversal yesterday. Actually undercut the early October lows, took out support in the 2710 area, but then quickly rallied back. So we'll say that that is a key reversal. I don't think you can argue with that. Support remains in the 2710 to 2720 zone, and then below at 2650, which would be a 10% correction from the all-time highs. Resistance comes into play from a price-based perspective in the 2800 to 2820 zone, and then 2850 around that area. I would argue now that we could start to call 2768, the 200-day moving average, a resistance spot here to the upside. And it's interesting to note that the 200-day moving average is beginning to flatten out after being in a strong uptrend. But what's interesting to me is, while we're trying to answer the question of is the RSI shifting to bearish ranges, I would note that there was a positive divergence on the chart yesterday. Undercut the low, made a higher low on the RSI. So that's important. That's a first step in potentially finding a floor and building a base here. But I would note that Chaikin money flow remains bearish. So some mixed signals here, as you would expect, as the market is trying to figure things out. But keep an eye on this 2710 to 2720 zone, especially this morning with the futures trading lower, kind of near the top end of that support zone after the key reversal yesterday. So S&P 500, Russell 2000 undercut the recent lows, but reversed to close higher on the day. This is what I'm talking about in my note today. The Qs actually did not make a new low yesterday, so that's kind of interesting. Sentiment remains fearful, potentially with signs of capitulation. And as we said, futures do point to a lower open. So just taking a look at the power bars, you can see some deterioration from a ratio standpoint. Dow loses 50 basis points yesterday. We had a bearish stock. 5 bullish or very bullish stocks, 2 bearish or very bearish stocks. Bullish stocks on the S&P 500, which fell 57 bips yesterday, declines to 58. So 58 bullish or very bullish stocks, 103 bearish or very bearish stocks. NASDAQ, as we said, the Qs did not undercut their low, and the NASDAQ was a slight outperformer yesterday. 14 bulls to 17 bears, and the small caps resume their trend of underperformance. Down 91 basis points, 117 bulls, 494 bears. Bonds uptick, and the Chaikin Power Bar says that small cap stocks are more bearish than large cap stocks, and the major indexes are mixed. Let's take a look at our stock of the day. I mentioned that email. If you're following along at home, today's stock of the day is Gulfport Energy, which comes from the oil E&P part of the energy complex. And I think if you're looking at energy names, you want to focus on E&P over services. GPOR, very bullish stock due to very strong earnings performance, very strong price volume activity, very positive expert activity, and attractive financial metrics. GPOR is a very bullish stock with a strong trend, but as we've been saying, a lot of weak industry groups out there as the industry groups are determined by the power bar ratio. Let's take a look at the ribbon at the bottom of the screen. The stock's been bullish since mid-April, but relative strength has really been kind of the issue here for this stock, and you can see it. Sideways action, wavering relative strength. We've been positive, we've been negative. Currently, market and model not in agreement. Dynamic duo not in gear as the stock is underperforming relative to the SPY. In addition to that, we've got some bearish money flow, but the stock is above the long-term trend line, which is flat. 3 out of the last 4 earnings announcements have been positive surprises. GPOR, Gulfport Energy, reports on Wednesday, November 7th. This is one where I say add it to a bullish watch list, wait for an oversold reading, see if we can get that relative performance to improve before getting involved. I mean, I would note, energy is one of the weakest sectors that we look at. So, I mean, in an environment like this, with the market still trying to find its levels, I want to wait for premium setups on the long side. This doesn't qualify as a premium setup, but it does qualify as a name to add to a bullish watch list, which we're going to do today. Let's look at our sector movement over the last 5 days. Defensive posture of the market remains in place. Staples, utilities, and real estate are the top 3 performing sectors of the last 5 days. Energy under pressure with oil, industrials under pressure, cyclical names being hit, materials continue to be weak. You have cyclicality there, you have commodity exposure there, and you have exposure to global markets, which are all weak, weighing on the materials. We've been bearish materials, we remain bearish materials, and don't see a reason to really change that view right now. Kind of the middle of the pack are our horsemen, tech, and healthcare. We want to see those continue to do well. Comms given some back after a nice run. Now, our industry in focus today is one that can be considered defensive at times, but it doesn't look compelling here. It's the Dow Jones REIT Services industry group, which over the past 6 months has underperformed the S&P 500 by 3.5%, and its power bar ratio, which measures future potential, is very weak, with more bearish than bullish stocks. It's currently ranked number 16 of the 21 subsectors that we track, and it's moved down 5 slots over the past week. And you can see that ratio here. Only 2 bullish or very bullish stocks, 23 bearish or very bearish stocks. And some of the indicative names here on the very bearish side of the coin, Macerich, ticker symbol MAC. A couple weeks ago in my bearish insight notes to Chaikin clients, this was actually my bearish idea when the stock was around $55. It's now trading around the $50 level and still looks compelling. Healthcare Realty HR has a very bearish rating, as does Invitation Homes, ticker symbol INVH. Let's take a look at one of those today, and it's going to be Invitation Homes. Very bearish stock, weak trend, weak industry. So if you're looking for bearish ideas, you'd be fishing in the right pond with this stock. The ribbon at the bottom of the screen tells us where we are and where we've been from a power gauge perspective, and you can see that this is just a very bearish stock, and it's been underperforming the market since early August. Market and model currently in agreement. Dynamic duo in gear as this stock is underperforming relative to the SPY. Stock has become overbought with bearish money flow, actually triggered one of our proprietary signals today. This one, the overbought sell signal. Stock is below a falling long-term trend line. That sets up an opportunity. This bounce here towards the $22 mark sets up an opportunity to enter a bearish trade. I think you want to look at put options or vertical put spreads. If you short stocks outright, I think that that's a compelling opportunity here. But ticker symbol INVH is a compelling setup for a bearish trade here and now, as it checks all the boxes of what we're looking for when we're looking for bearish trade ideas. Take a look at INVH as a bear idea today. Trending, yesterday's S&P 500 movers and shakers. Cadence, CDNS, very bullish stock, up 15+% yesterday following their earnings. Pulte's one of the beaten down home builders. The home builders have really come under pressure. And I'm starting to think that it's a little bit overdone to the downside. If you take a look at the home building and the home construction ETFs, you can see how far removed they are from their 200-day moving averages. Pulte rallies. McDonald's rallies on earnings, up 6%. Verizon up over 4% on earnings. That's a bullish stock. And Zion's up 4%. Cadence, I would add, is a very bullish stock. On the loser side of the coin, Dish caught a downgrade that sent the stock down over 8%. Caterpillar down on their earnings. DGX was the worst performing stock in the XLV yesterday following their earnings. Wynn hits a 52-week low as the situation there just continues to worsen. Again, Wynn was one of my bearish ideas in our bearish insights note at around $148. That stock now trading at $102, and PCAR down over 5% on earnings. We're still in the heart of earnings season. We can see here Regions Financials missed. Biogen beats by 60 cents. Capital One beats by 23 cents. Illumina, 27-cent beat, and Lockheed. Defense stocks have been acting well. Lockheed beats by 82 cents, but I would point out, if you look at the data, companies that beat earnings are not being rewarded. They're actually trading down about 0.5% on average, and the companies that miss are actually underperforming relative to their average. So just something to keep in mind as we wind our way through earnings season here. Before the bell, we're going to hear from AT&T. Saw their numbers come across the tape. It looks like the EPS number missed. It is a bullish stock. O'Reilly is a bullish stock. Kind of get a sense for the consumer here a little bit with O'Reilly after the close. Some neutrally rated stocks before the open to keep an eye on. NOC, UPS, an important read on the economy. Boston Scientific, another name that we've been looking at. Boeing out with numbers that beat EPS. We'll see how that stock trades. And then bearish stocks before the open, Illinois Tool Works and Rollins. Keep an eye on these cyclical names. After the close tonight, we'll hear from F5, important name within tech, as well as AMD. A lot of volatility in that stock that people are going to be keeping a close eye on. Raymond James Financial and Citrix, and obviously Microsoft. These are all neutrally rated stocks. Microsoft, obviously a bellwether. However, DRE after the close is a bearish stock. Jake can suggest caution when holding bearish stocks ahead of earnings. So on Wednesdays in my note to Chaikin Analytics clients, as you know, we look at sentiment. And what I can say is the sentiment indicators that we look at week over week have really pushed further towards fear, and we're starting to wonder if there are signs of capitulation popping up. And the reason I want to point that out is here's a chart that you've seen. It's the 13-period moving average of the CBOE put-call ratio, and it's over 1.1, actually at 1.12 as of yesterday. But what's interesting to me here is take a look at times when this indicator has eclipsed the 1.1 level. It's tended to mark tradable bottoms for the S&P 500 right here, back in this time frame. We did it again back here. Early 2016. Is it a perfect timing tool? Absolutely not. But to me, it's a wake-up call, right? Even earlier this year, we ticked over 1.1 to coincide with the March lows. It's a wake-up call that if you're looking to press bets to the short side, it might not make the most sense. Maybe be a good opportunity to cover some short positions or some bearish trades that have been working out as the market has sold off, as there are signs of capitulation from a sentiment standpoint. Just something to keep in mind. Also, something to keep in mind is that the group that really kind of started this downtrend, the high growth and momentum stocks, and we'll use the Qs as an indication for that, did not undercut their lows yesterday, right? We saw the chart of the S&P 500, and if you look at one of the IWM, it looks very similar. There was an undercut of the lows before the reversal. Here's the Qs, actually made a higher low. Could we potentially be starting a triangle? Yeah, I guess you could say that if you're a pattern trader. However, I think it's important to keep in mind, Qs did undercut the 200-day moving average, quickly regained it, did register a higher low on the RSI. Chaikin money flow does remain bearish, but I do find it interesting that the group that led us here did not make a lower low yesterday. Just something to keep in mind. Again, if you're looking to press shorts, might not be the best idea in the here and now. And if you have some profits on some short sales, I think it makes sense to start to think about covering them. And if you're looking for a long idea, I think Pfizer looks compelling, right? Bullish stock, strong trend, as I said, weak industry group. Dynamic duo in gear here. Market and the model are in agreement as the stock's been outperforming relative to the SPY. Currently oversold with bullish money flow above the rising long-term trend line. They do report earnings next Thursday, but I think Pfizer looks compelling as a long idea here and now. So sign up for that email, as I said, shakenanalytics.com/today for free stock ideas. Follow along with this show. See you here tomorrow, everyone.